Dr. Ousmane, I would like to begin by asking you, we know that the World Bank puts a lot of emphasis on financial inclusion and the role it can play to reducing poverty and boosting economic growth in the region. In your view, what are the key strategies and initiatives that can help countries advancing the financial inclusion agenda, particularly in countries where large parts of populations are still lacking access?
Thank you very much, and very good morning, everyone. You raise a very important point, which I just wanted to address from four perspectives, because financial inclusion has become fundamentally important in the world of us today. So the first element which is important to consider when you look at it from the perspective of the bank is that financial inclusion first need to be well understood as a means for individual businesses to have access to useful, affordable financial products and services that meet the need for transaction, for payment, for savings, for credit, for insurance, and which are delivered in a responsible and sustainable way. That's the first point, which is extremely important to set. The second point is financial inclusion is also a way through which poverty can be reduced. And reduction of poverty is still fundamentally important, especially for developing countries. You take it from the perspective of services, which just allow people, among others, to have access to businesses, to be able today to build resilience, to invest on their future. Those are basic elements which contribute today to the way through which an individual can be helped with financial services. That is on the individual part. But there is also the macroeconomic, which is extremely important, which fosters where people can currently have a financial inclusion to improve their financial health. By financial health, I mean ability to manage financial obligations, ability currently to build wealth, but also to have a job creation and economic development. This is a second point. The third point, very quickly, is what does it take in countries to achieve financial inclusion? And for me, the important point, which always we do look, is when it comes to policies, when it comes to regulation, when it comes to private sector, and how to make it, a whole package which can be then delivered. So while financial services, and this is the last one, while financial inclusion is also important, I think it is important we look at how is it being delivered, the services, how the payments are being received, how transactions work, what is the transparency associated with that, and ultimately how it can help individuals strive. And among individuals, I think the role of women is absolutely key. We will be able, on the set of our discussion, also to raise the issue of disparity of financial inclusion across the world.
I'm going to bring David in at this point. In terms of those policy frameworks, what can governments implement to promote that inclusive finance and make sure that the funding is accessible to all from your perspective?
So, firstly, I think it's very good timing that we're on after the previous panel, because Satoyo from M-Pesa said a very important thing, which is that by the digitization of payments and facilitated by the smartphone, you've seen a significant increase, even though he was quoting numbers of only 20-30% penetration rate. But take in Kenya or in other East African countries, it's a very significant increase in participation in the economy and in the financial system on the back of those innovations. Now, ultimately, it was also government policy which allowed those to flourish. So I think the first thing that governments can do is to make sure that digitization of economies, whether it's the smartphone, whether it's the initiatives in India, for example, for making sure that everybody has a digital identity, has a bank account. So these are very significant policy developments which are important for that. But it's actually what they then release which is most important, because the spectrum of social and inclusive financing may be at the lower tier of the economy, but actually it relies on the entire economy. And again, quoting Satoyo, he said traditional banks can then participate because the credit understanding or the economic activity of small businesses and individuals is much better understood. And this brings me to the last point, which is data. And data is essential. It allows for aggregation of information, it allows for much greater transparency and certainty, and therefore governments, if you like, data policies, and allowing the private sector to benefit from data, whether it's through data sharing, open banking, whatever, will allow capital to flow towards those opportunities in a way, in the absence of data, the absence of transparency, it couldn't previously.
Where does energy play into that then? Surely that's key?
Energy policy is essential everywhere. It is essential also in financial services, as your question implies, because we need data centers, we need cloud, we need all of that to make it work.
What are the risk elements, and this is to both of you, the risk elements associated with financial inclusion? Obviously, we're talking about the positives, but are there many risks? David?
Well, of course, when I think risk can happen, from a range, and your previous panelists were talking about the very, very fast typists at one end, so fraud, or it can happen at just poor credit performance that can happen in underlying participation. But our experience, and we operate in 160 countries around the world, we do very, very significant social and inclusive financing programs working with either development agencies, NGOs, or with local parties. The worst thing that can happen is that you have the wrong projects with the wrong counterparties, the wrong investors. If I may turn to the positive, one of the good things that is happening, and the World Bank is playing its part in this, as well as the development financial institutions, is broadening the impact of particularly risk mitigation, which is coming from the global agencies, which is helping not just at the social inclusive level, but also at the project and asset financing level to diversify the sources of finance.
Ousmane, you were nodding in agreement with some of those points. I mean, what have been your experiences in terms of any risks that you're potentially facing?
Look, on every single transaction, there is a risk. But what is important is how the risk is being managed. Mm-hmm. And we see that overall framework sometimes whether the risk outweighed the benefits. Now, from what we are living today, if you take financial inclusion, I believe that no matter how important is the risk, there are mitigation measures to address it. But most importantly, with respect to the world of today, financial inclusion is still so fundamentally important for so many segments in economies, for so many people across the world, especially when we talk about those who don't have access, those who need to be covered. And the risk for them, the fundamental risk, is currently having a majority lagging behind. Mm-hmm. So that gap needs to be filled.
How can we close the gap? How can countries make sure that that gap in financial inclusion is addressed?
First, I believe there is a fundamental need for countries to have political will and commitment. It's extremely important. Second is countries need to have much more clear strategies. We have seen over the past decade, within a decade, the number of countries have almost moved from twofold to three to fivefold, just on having strategies related to financial inclusion. This is an extremely important step forward. But what it does is also it builds the resilience of community, because people have access to much more modern means. People have become much more resilient on the way they will be able, for example, to capitalize their wealth, on the way they will be able to spend it, and by doing it to diversify opportunities of investment. And that is why that risk is worth taking.
David, when we look at innovative funding models, such as community banks, microfinance, how are they contributing to democratizing access to capital for underserved populations?
Well, they are. And it's not just... access to capital, and capital is an interesting word, and again, you heard it in the previous panel. So as soon as you have payments, and as soon as you have the ability to transact in that way, then naturally the access to capital, particularly credit, starts to build, and it can start with very, very small amounts. Again, in a number of the participants might be saying, and I think Satoya said, they're doing $40, $50 million a day, but these are very small extensions for small periods of time. However, when you build on that and you start to get a track record of data, not just about individuals, but also about a portfolio, whether it's a group of farmers or what have you, then it starts to become more attractive to more sources of capital to lend into that environment. And to give an example, there are investors now and corporates who have excess liquidity in many emerging markets that are trying to expand social inclusion. They themselves have their own social policies, which sort of say they want to extend it. And one of the things that we're able to do is take, for example, excess deposits that multinational corporations have in countries and say, we can make that as a credit extension into a social finance initiative. And that's utilization of an alternative source of funding that would otherwise not have been available at all, and in the private sector would have been something that would have had to rely on some sort of government or DFI support. So that's diversifying the source of capital which is available. But if I may make one point, it's a mistake to look, I think, at these initiatives as just with a social purpose. And indeed, embedding, as we've done, where we put our social financing teams in our business. They are business teams. They're not just social teams. And that way you're getting better outcomes. And indeed, since we've done that, we've more than doubled our annual rate of ability to do transactions and extend credit, because it's fully through a business lens, not just through a social lens.
Slight overlap from the previous panel when we look at digital financial. This is going into a technology question. How much of a role do they play in enhancing access to funding? And with such fast enhancement and changes in the technology, what are we going to see in the next 3 to 5 years? Dr. Ousmane.
I mean, we're going to see a fast-track change in this agenda, simply because the innovative instruments being put on the market become more and more sophisticated, and because also there is this opportunity for so many countries to leapfrog from those who are already in advance. We're going to see this possibility of more and more increasing which kind of products will be available, how they will be related, but also when you link it to the fact that more and more issues like, for example, modern telecoms, for example, mobile money in some part of the world have become just a simple tool as it has never been. And the use of money just become so easy from a transaction perspective. At the same time, and this is perhaps where coming back to the gap which might exist between those who are not yet covered, how fast-tracking the agenda of financial inclusion is going to be important. Because simply millions of people across the world still, just as we speak, don't have a simple account. What needs to be done? How to make sure that they can have access to simple modern technologies. But you see that modern technology sometimes can be linked to one single element: access to electricity.
Yeah.
I think two things. One is that, and this is a government summit, more governments will see more examples of economies succeeding, and succeeding on the back of digitization and some of these programs. And again, the government's working with private sector to make sure that they're opening these services and capabilities to more of the population.
Do you think that's the priority, the first thing that should be addressed, or?
Well, I think financial systems rely on confidence and trust, and therefore I think the more that governments with these policies are saying, how do we create at a higher rate and higher volume this level of inclusion that Dr. Ousmane talked about. The second thing I think is, which is not technology related, But one of the great benefits we've seen is that the strategic development goals, which is a very, very good thing that the UN has done, allows a framework of metrics to be developed against the individual goals. And that's, again, where technology can help. It comes back to my transparency point, that when you're gathering the metrics and can show how these programs are working against specific goals, and Sustainalytics and others have done work in this area, that, again, builds the confidence and builds the trust in these programs and these systems. So I think governments themselves, seeing other examples working, and then I think the international capital, being able to rely on those goals and the metrics with them.
Ousmane, do you think it's achievable, what we're discussing here? Do you think we're going to see it soon?
Absolutely. Soon, perhaps, would be too much to say, but it is achievable.
Yeah.
It is achievable because currently contexts like this one help countries to leapfrog, to better understand where some technologies are, how some countries have done it, and how they will be able perhaps to shortcut. That shortcut also is part of how currently institutions can work together. And this is why a world governance summit like this one is a fantastic platform for knowledge exchange, for best practices, and at the same time it helps different level of stakeholders to set the stage of where they are today and where they will be. And by doing so, they can also network with other institutions on the way they will be able to be accompanied. And that's why I'm confident that yes, it is achievable.
Dr. Ousmane Dione, David Livingstone, what a pleasure to have you with us today. Thank you so much for dropping by. And ladies and gentlemen, let's put your hands together and a round of applause for our panelists.